What are we going to learn about the Fed's neutral rate? I mean, the re-rating we've seen in that from 4% to 2.5% is quite extreme. Are we going to learn anything more about that today?
I don't think so, and I think the dot plot has kind of lost some of its significance just because there's so much disparity between the various estimates among the FOMC members. So I think it's losing its role as a guiding tool, and we saw that in terms of this year, how quickly the Fed had to pivot from kind of the steady track that it was on last year, you know, kind of a hike every quarter until we got to R-star or some kind of neutral rate, maybe slightly above, and now they're playing defense, having to cut when they probably really don't want to or even don't see the need to it, right? Because coincident indicators, unemployment, consumer spending remain very strong. So for the Fed to keep cutting here into what would be a full easing cycle or even a small easing cycle would require a leap of faith that the yield curve is all-knowing and that the fall in the PMI below 50 is the start of a bigger trend. And you know, those are unknowable things to know in real time. But the longer the curve stays inverted, the more powerful its signal becomes, at least from a historical perspective. So, so I think ultimately it comes down to really the neutral rate, not the neutral dot, but the neutral rate, which by the Fed's estimates has already fallen about a quarter point this year, which means that the July cut actually was just to stay at where it was. So it wasn't even really a cut because everything is relative to where the natural rate is.
Jurrien, you bring up a good point, and it also is the point of, and will a rate cut actually do anything? Do we need it, and will it work? I just wanted to highlight something that Augustin Carstens, head of the Bank of International Settlements, said earlier about fiscal versus monetary policy. Here's what he had to say.
If we had a different trade policy, central banks would not be pushed so much towards accommodative monetary policy, and therefore probably monetary policy will need to deplete its policy space.
Jurrien, how much did we learn about that? We heard it all from Mario Draghi. Fiscal, fiscal, fiscal. Do we hear it today from Jay Powell?
I think that's correct. And obviously in the U.S. we've already gone to fiscal. I mean, we're running pretty substantial deficits already 10 years into an economic expansion. But it's that, you know, Japan has been sort of doing it. China tends to go in that direction. Europe, of course, is the last one to go just because of the structure of the EU. But a combination of fiscal and monetary, I think, is the next frontier, because at some point monetary policy becomes you know, the tools become inadequate as you get closer to zero and even into negative rates. And in Europe and Japan, I have yet to see evidence that negative rate policy is effective in any way. So it does really come down to fiscal.